And still in Nigeria, where the Federal High Court sitting in Abuja, Nigeria's administrative capital, has adjourned the hearing of the suit seeking to stop the federal government from converting its ways and means debt for about 22.7 trillion naira to promissory note or the issuance of treasury bills and bond certificate. The presiding judge, Justice Kolawole Omotosho of the Federal High Court in Abuja, adjourned the hearing till December the 4th to allow all parties to file necessary court processes and then adopt same. Marvelous Obomanu in this special report looks at the legality of the act by the federal government and the impact on the economy.
Ways and Means is a stipulated avenue for Nigeria's government to raise funds from its apex bank, which finds legitimacy in the CBN's Act. According to extant provisions captured in Section 38 of the CBN Act 2007, it states that the advances must, however, not exceed 5% of the previous year's revenue. Despite these provisions, Nigeria's federal government have consistently flouted the rules, borrowing above the threshold allowed. The Senate recently approved an upward review of the Ways and Means loan accessible to the federal government from 5% to 15% in clear variation of the CBN Act.
Approval granted by the National Assembly is against the law, and all the processes and the steps already taken or that the debt management office will be taken, in time is actually against the law. So that is why we are in court. And for a lot of people who do not understand how this debt, if it's securitized, is likely to affect them, in regards to inflation in the country.
As the federal seeks to turn its outstanding Ways and Means loans into bonds, promissory notes, and treasury bills, some think this is against Section 38, Paragraph B of the CBN Act of 2007.
Every amount that is borrowed under the Ways and Means ought to be repaid within that particular year. And now that is not repaid, Section 38 expressly prohibits the repayment to be in a form of securitization, promissory note, or any form of bond at all. So even if the federal government wants to repay this debt back to the CBN, it cannot be pursuant to Section 38, which is why we're in court. It ought not to be by way of securitization, which the federal government, the CBN, the debt management office has actually started the process right now.
It's against the CBN Act for the government to borrow past a particular percentage, which is exceeding 5%. Now the Senate apparently passed a bill to take it to 15%. This is against the CBN Act setting up the CBN. So it's important, instead of focusing on borrowing, because as the government is borrowing from the central bank, exceeding its limits, it's not going to allow the central bank to focus on the real sector. And the real sector is where we need to focus on to create jobs.
While interested parties have instituted a suit at the nation's Federal High Court in Abuja to challenge this act, the presiding judge adjourned hearing of the suit to December the 4th. Experts reveal economic implications the move by the federal government will entail.
Bonds are financial market instruments that are being sold, like shares of banks now, but these are shares of government being sold to the public. Now, you as a public, if you come and subscribe for it, maybe you buy 100,000, let's say 5 million worth of bond, you are now taking money away. Your money, you're giving it to the central bank, which is being taken away out of the economy. And that constricts the economy.
The danger actually goes beyond the illegality, like I mentioned earlier on. It goes that because it impacts the financial capacity of all Nigerians generally. So, as we mentioned earlier on, the inflation it will lead to is very, very serious.
Marvelous Obomanu reporting for News Central.